Wall Street snaps a three-day winning streak as key indices close lower, led by tech stocks. Asian markets open under pressure, while the GIFT Nifty is also suggesting a lower start for the Indian market. Crude prices retreat from multi-month highs, but Brent continues to trade above $81 a barrel. Gold prices rise to monthly highs as Treasury yields dip. Reliance Industries reports a good set of third-quarter numbers driven by retail and oil-to-chemicals business. Jio reports numbers in line with estimates. Infosys raises its revenue guidance for FY25. Third-quarter revenue growth beats estimates while margins is in line with expectations. ADR shares, however, trade with cuts of over 5%. Axis Bank's deposits and advances growth comes in at a 15-quarter low as it reports a weak set of third-quarter numbers. LTI Mindtree earnings are marginally above estimates, beating expectations on revenue growth and margin expansion. Tech giants Wipro and Tech Mahindra, along with SBI Live, will report the third-quarter numbers today. Also, watch for third-quarter numbers from Jio Financials later today. Hello, good morning. You've tuned in to CNBC TV 18 and you're watching Power Breakfast with me, Vinny Motiwala. A quick look at the Asian markets today because the indication that's coming in for the Indian markets is a muted start. We're seeing the Taiwan index that's down 0.3%. Hang Seng is down 0.3% as well. And what we're seeing, Nikkei, that's the Japanese index, that's down more than 1%. Kospi also not holding on to too much in terms of a performance that's coming in this morning is also down 0.4% in trade. Only one in the green on the Asian side right now that I can see among the main indices is the ASX 200. So other than that, Asian markets also is indicating a muted start that we're seeing coming in for the Indian markets. Let's pull up the Nifty implied open because that is down almost 50 points in trade. So we're expecting a bit of a subduedness coming in for the Indian markets. But let's also look at what the US markets did because Wall Street indices fell, ending the three-day winning streak that they were seeing following the pressure coming in shares of big tech. Now, Dow Jones slipped by 68 points. S&P 500 was down 500 points. S&P 500 was down by 13 points, I beg your pardon, as well as tech-heavy Nasdaq declined by 173 points. CNBC's Angelica Pebbles is getting us a wrap on what happened in terms of Wall Street.
U.S. markets were down marginally across the major indexes Thursday as the tech rally that powered gains earlier this week loses some steam. The Dow down 68 points, the S&P 500 lower 13 points, and the tech-heavy Nasdaq falling 173 points. Scott Bessent, the billionaire hedge fund manager, who was President-elect Trump's pick for Treasury Secretary, laid out his case for the next administration's economic agenda in his Senate confirmation hearing today. Bessent told lawmakers that fiscal spending is out of control, that the U.S. dollar should remain the world's reserve currency, and that he believes the Federal Reserve should remain independent. He also testified that Trump's 2017 tax cuts should be expended past this year, and he expressed support for Trump plans to impose steep tariffs. President Biden signed a new executive order today aimed at cybersecurity. The order imposes new standards for companies doing business with the U.S. government. It's all part of an attempt to combat the rise in cyber attacks against federal agencies. The order will also require companies that do business with the federal government to follow a new set of security practices. Software companies will also have to show that their development processes are secure. Bloomberg today reporting that the FBI has warned agents that hackers who breached AT&T last year likely stole months of their call and text logs. That's what's happening here in the U.S. Back to you in Mumbai.
Thank you so much for that. But the Federal Reserve Governor, Christopher Waller, comments that he is happy with the latest inflation number and hopes it continues to remain in the same range. Listen in.
It's the sixth month out of the last 8 where we think core PCE inflation will come in below 0.2, which is getting very close to what our 2% inflation target would be in terms of core. So the inflation news is good. We had a couple of bumpy months there in September and October, but it looks like it's getting back to trend. We'll have to wait and see whether this continues. I believe it will be. We'll see some base effects come out, but Last year, we got a shock with inflation in January and February. They kind of put us back in terms of our progress for cutting rates. I'm hoping that doesn't happen again, so that if we continue getting numbers like this, it's reasonable to think that possibly rate cuts could happen in the first half of the year.
Now let's get you the final update coming in from the global market wrap this morning, and the European markets closed Thursday's trading session higher following a boost from luxury sector on the back of better than expected results from Richmond. Now the French CAC index also added 160 points at close, while German DAX gained 80 points. The British FTSE ended more than a percent higher in trading session yesterday, while the regional Stock 600 index ended the day with 0.93% higher, with most of the sectors trading in the positive territory for them. So that's the wrap that we have coming in terms of global market, so US market, European market. But how is all this actually going to be impacting our Indian market? We do have a research team joining in with us to tell you how the trade setup is looking like, which are the important stocks that you should be keeping on your radar as well. Good morning, Hormaz, Vamakshi, as well as Sudarshan. And Hormaz, let's start up with you. Trade setup, how is that looking like for the Indian markets? Will we manage to hold on to those gains that we've seen in the last few trading sessions?
Good morning, Vinny, and the bulls would certainly hope for that, because it's a very important session that lies ahead of us, because it is today's session that might determine that the 3-day up move that we have seen, whether that builds on or we just reverse from that 3-day up move, because the Nifty has gained almost 300 points in these last 3 trading sessions, and it was the second day yesterday that we made higher highs and higher lows on the charts, and that also the usual expiry related volatility was missing. But 3 very important factors that will determine how the Nifty moves today, and it was the 3 big earnings that came out after market hours yesterday. Reliance ended at the day's high yesterday. Numbers were good. The Infosys also numbers were good, but the ADR was down 6%, so we need to keep that in mind. And in line with that, even Wipro's ADR was down 4%. Wipro comes out with numbers later this evening, and Axis Bank as well. It did recover from the lows and ended at the highest point of the day ahead of the result, but the numbers were weak. But the actual recovery is taking place in the broader markets, because the both mid-cap and the small-cap indices were down 4% each on Monday, and both of them have recovered all of their Monday's loss over the last 3 trading sessions. There'll be plenty of activity in the stock specific market as well, but earnings reactions, of course, we have noticed in the earnings season so far that the beat to already subdued expectations is getting handsomely rewarded, but accidents are getting punished as well. As HCL Tech was a case in point, and today we'll have earnings reactions from other names like Havells, LTI, Mindtree, and Metro Brands as well. And today there are important results other than Wipro, be it Tech Mahindra, be it SBI Life, ICICI Lombard, and even Jio Financial Services. So plenty lined up on the final trading day of the week. Some important levels also to watch out for on the index. The GIFT Nifty for now is indicating a cautious start.
Okay, a cautious start is what we're watching out for the Indian markets today. But let's go across to Vamakshi, who's here to tell us which are the important stocks that you should keep on radar this morning. Vamakshi, good morning.
Good morning, Vinny. Let me first start off with Reliance Industries. Revenue saw an uptick of almost 6.6%. The consolidated margins to improve from 18.1% to 18.3%, while the net profit saw an uptick of 7.4%. So good set of numbers for Reliance Industries. Axis Bank is the next counter that we're watching out for. Deposits saw an uptick of almost 9% year on year, while the advances also saw a similar uptick. NII was up nearly 8.6% in line with our poll. Net profit saw an uptick of 3.8%, while asset quality was more or less stable. Infosys, on the other hand, Q3 dollar revenue growth saw an uptick of 0.9%, higher than estimates. CC revenue growth too came in higher than estimate at 1.7%. Q3 margins expanded by 20 basis points to 21.3%, and the FY25 CC revenue guidance has now been revised to 4.5 to 5% as compared to 3.75 to 4.5% earlier. LTI Mindtree's CC revenue growth came in at 1.8% sequentially, slightly higher than the poll. The dollar revenue growth at 1.1% sequentially was slightly lower than the poll of 1.2%, and the EBIT margin came in higher at 13.8%. Havells revenue saw an uptick of 10.8%. Margins have, however, declined to 8.7%, and the net profit came in much below the poll at 278 crores. Metro Bank's revenue saw an uptick of 10.6%. Margins have come in slightly higher at 32%, but the net profit overall declined by 3.9%. So keep an eye out on all of these counters.
Okay, Vamakshi, thank you so much for that. But let's finally go across to Sud, who's here to tell us what is going to be happening in the world of F&O this morning. What are the important cues there? Good morning, Sudarshan.
Good morning, Vinny. So while market might have gained for third straight day with broader market recovering entire losses that both mid-cap index and small-cap index had seen on Monday, but for today, GIFT Nifty covering all the cues is indicating a lower start country. It's down nearly 50 points. Talking about the flows, FIs remain on the sell side. Yesterday, they have sold more than rupees 4,000 crore, and with yesterday's sale in January so far, our entire sale has crossed rupees 40,000 crore. While for DIs, they have bought nearly rupees 3,000 crore, and in the index futures, 2FI have sold nearly rupees 900 crore, and they have reduced long contracts by 581, and at the same time, they have added short positions by more than 6,700 contracts. And with this, FI's long exposure now stands around 17%, and on the client side, long exposure remains around 72%. On the options front, 23,000 call was the most active option, where there we have seen addition of more than 10 lakh shares with premium at around 206. On the put side, 23,000 put and 23,300 put were active with premium around 72 to 167. With this important level for Nifty, support is now seen somewhere around 23,000 and resistance remains around 23,400. Lastly, stocks in focus, keep an eye on IT stocks because Infosys reported earnings which were beat. Even they have raised the guidance on revenue front, but the concern remains on margin because over the next 2 quarters, company will be taking wage hike, and now expectations are that in FY25, margin might come in the lower band of the guidance. And second, keep an eye on Reliance because earnings for Q3 FY25 were beat because all round beat, and even all the brokerages remain positive on Reliance Industries.
Okay, Sudarshan, thank you so much for that. Keeping an eye out on those stocks as well on the back of the FNOQs that we're getting in. But on that note, we're going to slip into a very short break. After the break, we'll get you the latest highlights that is coming in from Reliance Industries and Infosys on the back of their Q3 numbers. So stay tuned in for that. Welcome back and thanks for staying tuned into Power Breakfast on CNBC TV 18. Now, Infosys reported an inline set of numbers in Q3. Rima is going to take us through the details of this number and what are we expecting and how will the stock move today.
So it was a good quarter for Infosys. Revenues beat street expectation. Revenue growth at 1.7% was ahead of the consensus expectation of 1%, ahead of its closest peer TCS, which had a flat quarter, this time on account of furloughs. The margin performance was in line with expectation. Infosys margins inched up 20 basis points to 21.3%, but the wage hike impact kicks in only in Q4 and Q1 of FY26. On expected lines, the companies also raised the full-year revenue forecast. Currently, it's at 3.75 to 4.5%, and this was raised to 4.5 to 5%. Again, in line with street expectations, margin guidance unchanged at 20 to 22%. Deal wins steady at $2.5 billion. Attrition is inched up, and the company has hired more than 5,500 employees, hiring picking up for the second consecutive quarter. But the key positive takeaway in the management commentary was that they said that in Q2, discretionary demand picked up in US BFSI. But in Q3, the change that they saw was a recovery in discretionary demand, even in Europe, BFSI in Europe, and retail and consumer sectors in US. So these were the 2 pockets where we saw an incremental pickup recovery in demand, and that was a positive. So on the whole, it was a good quarter by Infosys this time.
Thanks for that, Rima. But let's in fact listen into what the Infosys MD and CEO Salil Parekh had to say on their Q3 performance in the press conference.
What we saw was, the last quarter we had seen discretionary becoming good in financial services in the US. Now this quarter we have seen financial services in Europe, also the discretionary showing signs of improving, and on retail and consumer products in the US is showing that signs of improving. Now, the second, I think, was about if that is the guidance, what is the Q4 and so on. So there, first, as we've always shared, our Q1, Q2 in a typical financial year are strong. Our Q3, Q4 are typically weak. So that's the sort of seasonality that we see.
And let's move on. And the earnings for big boy Reliance Industries were also reported yesterday. A good third quarter number that came in from the company last evening. Rima is joining in with us to give us those key highlights. Rima?
Well, Reliance Industries has reported a beat in Q3. The company's top line has gone up by 6.6%, margins have expanded 20 basis points to 18.3%, and profits are up 7.4% on a year-on-year basis. Now, the numbers are a beat compared to street expectations. Look at it on a quarter-on-quarter basis. We were working with an EBITDA improvement of about 8%. The company has delivered an EBITDA expansion of 12%. And now the beat, as you rightly said, has come in on account of two key segments. One is the oil to chemicals business and the other one is retail. So for the oil to chemicals business, the EBITDA has gone up sequentially by 16%. We were expecting about a 10% growth. Even retail, where the expectation was about 7 to 8%, the company has come out with a 16-17% EBITDA expansion on a sequential basis. Oil and gas on expected lines was muted. Sequentially, there is an uptick, but on a year-on-year basis, the EBITDA is under pressure, and Geo's had a steady quarter. Now, the reason for the strength in the oil to chemicals business is strong domestic demand, higher volumes and operational flexibility, while the oil and gas business, which is basically upstream, the EBITDA has declined on account of lower KG D6 volumes. For the telecom business in particular, it was a steady quarter, a 3.4% sequential growth in top line on a year-on-year basis, about a 15.5% revenue growth. And this is the second consecutive quarter of about a 15% revenue growth on a year-on-year basis. The driver of this is still the July tariff hike, and the full pass-through of that is still taking place. Margins are steady at 52.8%. The positive in the numbers are the subscribers. If you remember in the prior quarter, subscribers declined by 10.9 million in Q2 on account of the tariff increase. But this time they've managed to expand their subscriber base by 3.3 million sequentially. And on a year-on-year basis, it's up close to about 11 million. And ARPUs have now crossed the 200 rupee mark for the first time ever, expanding to 203.3. And the company says that perhaps we could see ARPU expansion going ahead. The words are the residual impact of tariff hike to flow through over the next few months, which means ARPUs are likely to inch up further from here. And 5G now accounts for 50% of the company's wireless traffic. So in a nutshell, it's a good quarter from Reliance Industries. The stock did well on Thursday. It was up 1.1% so far this year. It's outperformed the markets by nearly 6% with that 4% rally that we've had since the beginning of the year. But it's still 20% off from its 52-week highs of more than 1,600. So is there more to go? But let's find out about Reliance, because that was the key surprise, a positive surprise this time.
Okay, Rima, thank you so much for that. But let's move on, because Axis Bank also reported its Q3 numbers. This time it was a weak set of numbers that came in from the company. Abhishek is here to give us more details of this one. Good morning, Abhishek.
Good morning, Vinny. So two key numbers which surprised negatively. Business growth lower than what the industry is growing, and slippages way higher than what the industry did estimate. So 15-quarter low business momentum on a YOY basis. Deposit growth at mere 9%. Advances growth less than deposit growth at 8.8%. Now the CASA ratio perhaps for the first time in last 10 years or so, I'm seeing it below the 40% level. A 38-quarter low with respect to CASA ratio over there. Net interest margin is at 10-quarter low. It was expected to come down on a sequential basis, and it has come down. The return ratios are one of the lowest that you are seeing in last 7 quarters. Both the ROA and ROE are the lowest that you are seeing in last 7 quarters. Slippages, they were a tad bit higher than what analysts estimated, 5,432 crore, which is the highest quarterly slippage that you are seeing in last 13 quarters. The annualized slippage ratio is at 2.14%, perhaps the highest that you are seeing in last 11 quarters. Now, operating efficiency is one of the best that you are seeing in last 7 quarters, given the fact that OPEX declined by more than 4% on a sequential basis. So that helped the cost to income ratio at 46.2% versus 47% in the previous quarter. Core operating profit growth was healthy, up about 14.2% YOY and about 5.2% sequentially. With reference to the PNL, the NI was below our poll, and thanks to lower OPEX, the net profit was slightly ahead of our poll. Back to you.
Okay, Abhishek, thank you so much for giving us these details on Axis Bank and what we saw in terms of the numbers. But on that note, we're going to step into a very short break, and after the break, we'll talk to Manisha about what's happening in the world of commodities. So stay tuned for that. Welcome back and thanks for staying tuned into Power Breakfast on CNBC TV 18. Now let's go across to Manisha Gupta, who's here to tell us what's happening in the world of commodities this morning. Good morning, Manisha, and specifically crude. I think that's what we should talk about as well. What is happening in that space?
Well, yes, there is some profit taking that we've seen in case of crude oil prices. So we are off the 5-month highs that we started this week on. But importantly, we are still headed for a fourth weekly gain when it comes to the crude oil prices. Energy perhaps is the best performing, asset class or sector when you look at this year until now. One thing is that as U.S. President-elect takes over on 20th of January, the expectations are that he could soften the sanctions on Russia, and that is where the markets are getting their support from. And then India and China already are seeking supplies from Saudi Arabia. The markets also are taking support from the fact that the U.S. stockpiles have been declining for 8 straight weeks now, and the winter heating fuel demand is supportive. Is the reason you are looking at U.S. natural gas prices trading at a 2-year highs as well. But, across commodities, we are trading slightly on the positive side. The US dollar index is off its highs, and that has led to gold trading at 2-month highs. Aluminum is trading at a 4-month highs. Steel rebar is rebounded from a 3-month lows. Copper is at a 2-month high. Silver at a 1-month high. So across metals as well, we are looking at strong support system in Asia right now.
Okay, Manisha, thank you so much for giving us the latest update in the world of commodities this morning. But on that note, we are absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, Bazaar Morning Call.